Summer is coming, and while it might be the time for many people to take out their swimsuits and open their pool, well, this period is historically pretty interesting for many investors on the stock market. Indeed, as Wall Street adage says, sell in May and go away. While many experts might have noticed that the stock market has been going through a massive rampage since 1 year and that it doesn't seem to slow down, there are still plenty of great undervalued companies that are available on the stock market right now. It is why today you'll find 3 of the most undervalued companies that have a lot of potential of upside for the next summer. Without further ado, let's take a look at my pick number 1. First on my list is the chains of coffee houses Starbucks with the ticker SBUX. This business that is often considered as the McDonald's of coffee is often the first company that is visited by many coffee enthusiasts every single day. Indeed, through the ages, Starbucks has been able to establish themselves as a true leader in the high-quality coffee products. Nevertheless, over the past couple of weeks, we've seen that the total value of Starbucks has been totally plummeting. One of the main reasons that can explain this phenomenon came in their more recent earnings report. Indeed, we've seen that the results that they report during this earning results were pretty below the analyst predictions in terms of the total revenue and the earnings per share prediction, and this was mainly driven by a decrease of 2% year over year in their total net revenue combined with a decrease of 4% in their global comparable store sales. Due to these poor earning results in the Q2 of 2024, we've seen that Starbucks has been slashing their full year outlook for the rest of the year. Indeed, the company is predicting a slower growth in their total revenue growth in the single digit compared to what it was predicted between 7 to 10% year over year. As you can understand, these bad news have been hurting the confidence of many investors towards Starbucks, which is one of the reasons why the stocks is down more than 20% since the beginning of 2024. One other factor that has been negatively impacting their earning results lately is notably the inflationary pressure that they are facing. With the high interest rates and the inflation that doesn't look to slow down, it obviously impacts negatively the wallets of many thousands of different people, and it makes that these people don't necessarily have as much money as they had before the pandemic to buy high quality coffees. Nevertheless, the coffee business is still very lucrative as it lends itself to repeat purchases, and so with this argument, it gives Starbucks a very strong position. The premium coffee products offered by Starbucks involve no significant technology disruptions, and the industry's slow pace of progress should help Starbucks in the long term. This is especially right when we know that the company still has tremendous growth potential in the largest market in the world, which is China. Now, the second company on my list is another business that has been hit by different problems lately, which is the Toronto Dominion Bank with the ticker TD. This Canadian bank hasn't had a great beginning of 2024, where the stock is currently down close to 10% year to date, and where we've seen that on the 3rd of May, the stock has took a brutal knockdown. Indeed, since the announcement of the termination of the First Horizon Bank acquisition of TD last year, this has been hurting negatively the confidence of many investors toward this bank. Despite the fact that if this deal would have gone through, this would have made TD one of the largest banks in the United States, the management of TD has cited some regulatory hurdles to terminate this deal. This has made that more recently, we've seen that TD has set aside over $450 million to cover a potential fine connected to an anti-money laundering probe by the US regulators, which hasn't helped the investors to regain confidence toward this big Canadian bank. This now makes that many investors are waiting on the sidelines before the end of the investigation before to restart to invest in this big bank. Add to this, with the current turbulent economy combined with some super high interest rates, this has made that just like their peers, TD have been increasing the provision for credit losses to counter the effect of many borrowers that might not be able to pay their loan. However, if the central banks are truly able to slowly slowly start to decrease the interest rate and to give a great soft landing for the overall economy. This could greatly help any banks just like TD to see their borrowers' default reduce dramatically. At the end of the day, this bank still represents a great opportunity for many income investors that are looking for a great 5.5% dividend aristocrat that has still been able to pay some great quarterly growing dividends over the past couple of decades. Plus, despite the increase in their provision for credit losses, we've seen that over the past 4 years, TD has been able every single year to increase their total revenue. And so even if we are still in an unsure environment where we see that the bank stocks are fluctuating quite a lot, I personally believe that the worst is all behind them and that we could see some potential great growth in their total valuation over the next couple of months. Finally, the third and last pick on my list is the company Disney with the ticker DIS. The world full of happy creatures and singing princesses haven't been doing that great lately, where we can see that over the past 5 years, the stock's value has been down by over 10%. Nevertheless, since the beginning of 2024, we can see that the investors have restarted to gain confidence toward this stock, despite an important drop in their total values on the 7th of May that will be explained later on in the video. But this recent switch of momentum that happened lately occurred because of the return of the past CEO Bob Iger last year. Indeed, Bob Iger was the CEO of Disney for 20 years between 2000 and the end of its contract in 2020. During his previous tenures, Disney has made some major moves that propelled it to the powerhouse entertainment company that it is today, notably the acquisition of Pixar and Marvel Studios. This provides them a lot more unmatched assets that they are able to turn into different other sequels, theme parks, attractions, products, and sales. And talking about attraction parks, we've seen that the pandemic has been ruthless towards them, where we've seen a bunch of them close during this period. However, in their more recent earnings report, we've seen that their US parks and experiences revenue have been growing by over 7% year over year, close to $6 billion. And on their side, their international sales soared 29% to $1.52 billion on increased attendance and higher prices at the Hong Kong Disneyland Resort. Add to this, their streaming services, Disney Plus and Hulu, have been reporting their first ever profit in their latest earnings report, where we've seen that they've been increasing by about 17% year over year. Nevertheless, despite all of these great news and despite a beat in terms of the analyst predictions for their earnings per share, they were not able to top the analyst predictions when it comes to their total revenue, predicted to $22.11 billion and reported to $22.08 billion. And their worst business segment by far is their classical TV business that lags millions of Americans per year that stop watching the cable TV, while ESPN revenue rose by 3% up to $4.21 billion. Operating income on its side has been decreasing by an astonishing 9% down to $799 million. And this has made that even if Disney is projecting some great profitability in their fourth quarter in terms of their streaming services, they are still forecasting a massive loss in their entertainment direct-to-consumer unit for the third quarter of 2024. In any case, this American icon that has marked the imagination of millions of kids worldwide over the past couple of decades is still a wise pick to have on your watch list. Indeed, even if the company has been bleeding on Tuesday, we can see that Disney has pretty much hit its bottom, where we can see some great momentum since the beginning of the year, especially in their streaming services that might be able to catch back all the cable users that they've lost over the past couple of months. Add to this, with the end of the pandemic, their numerous attraction parks seems to become again a real destination of choice for many families, especially with the summer vacations that are at our door. So there you have it. Those are 3 great stocks to have on your watch list for the month of May 2024. Obviously, there are still many undervalued stocks that are available on this crazy market right now. But on your side, if you want to discover what are the different individual stocks that I personally have in my portfolio, well, check out the video that's gonna be right over here, and I will see you soon. Peace.